Today, we're going to talk about two things that got me into massive trading trouble. Now, don't worry, we're not talking about present time. I've actually been very good lately. I'm talking about backdooring what I like to call my reckless phase of trading. It was kind of like the Wild Wild West, and I was doing every and anything. And in today's podcast, we're going to talk about one thing that I was doing that I probably shouldn't have been doing, and also one thing that I wasn't doing that I probably should have been doing. Now, I love sharing these stories with you because I don't believe in regrets. And one of the cool things about my journey, after all, kind of the sadness and despair and rock bottoms and finally clawing my way up to the top, is that I have some really awesome stories for you. I have some really good lessons. And as a coach, as a mentor, it is my job to share them with you. That way, hopefully, you do not have to make the same mistakes that I did. Or if you do, maybe you only make them once instead of, maybe 3, 4, 5, 6, 7, 8, 9, 10 times like I did during mine before I found mentorship. So let's hop in. I hope you enjoy, and I'll see you guys again at the very end. Rules. We spoke on it in the Q&A. If you didn't get a chance to see Monday's Q&A, Monday Q&A was a great one. We really harped on the importance of rules, especially when it comes to some weird pattern stuff. We also talked about building a strategy called the revenge trading strategy, but a positive version of it, right? If you don't have consistency, and this was the problem that I had at the beginning of my career, where I didn't have any consistency in what time frames I was looking for, right? It was wild, wild west. I can just wake up whatever time I want. I can look at whatever time frames I wanted to, and every day was a little bit different. So sometimes I'd be on the daily, sometimes I'd start on the hourly, sometimes I'd be on like a 30-minute, something like that. And because of that, I was basically trading off of what I wanted to do. I told you guys in the past I had a really bad confirmation bias, right? And this was due to the fact that I didn't really know what trading was, right? I don't have any formal education, or I didn't have any formal education on trading. I took a macroeconomics class in college. I barely passed it, got D's in them. Horrible professor. I warn my students now, stay away from him, do not take his class. But I switched majors because I was so poor, or at least at the time I thought I was so poor at economics. So I got into trading just by, again, I knew about investing. I did stock stuff before, and I wanted to take the next step, which was in the stock market. And then I met a mentor and just paid attention to what he did. And he had a kind of an untraditional style of investing. And then when I made the switch from stocks to Forex, this was my first time learning about technical analysis. I didn't know what a chart was aside from a line chart on my, my brokerage platform. And I knew nothing about technical analysis and having rules and all that fun stuff. So I approached my trading very similar to how I approached my stock investment, which was I turned on the TV and read newspapers and listened to what other people said to get ideas, right? It sounds stupid, right? But many of you guys started that way, right? I don't think it's a bad way to start, right? With anything in life, if you want to be successful, find someone else that is successful and mimic them. The problem is, I assumed people that were on TV were successful because you wouldn't be on TV if you weren't successful. That's just the naivety of me being young, but yeah, I learned a lot. I don't think it's a negative. I have no regrets in going back and listening to Bloomberg all day like Ann and CNBC and Squawk on the Street and reading articles because I learned a lot. What I didn't understand was that there's an entertainment value of that, where it's like they're not necessarily telling me two things. One, they're not necessarily telling me stuff to help me. They're telling me stuff to keep me tuned in and, job done, right? Check that box. Two, I didn't understand that at the time that real investors, I didn't understand this basic concept. I'll put it like this. By the time it hits the news, it's too late, right? Does that make sense? That's the whole buy the rumor, sell the news thing, right? By the time it hit the news, it's typically too late, right? Because the news is based off entertainment. The news is directed at the general public, not the real investor and trader, right? I can't remember the last time I actually watched the new. I'm trying to think. The only time I'll really throw on the TV is like during the FOMC statement. And that's simply because, and I don't do it for the pundits. I just hear it to see whoever is speaking live, or like an ECB press conference, right? But I can't remember the last time I actually turned on a news channel to watch like the pundits speak, right? Because real traders know, like, you're not really going to gain any information off of that. You'll gain more information by clicking on an article and reading about it. But by the time it hits the news and they're talking about it, it's too late. But I didn't know that. So what I would do is I would listen to the news, and subconsciously I would create a bias based on what they were saying. So let's take the example we're talking about here on gold, where higher time frame we have a hold, and then but lower time frame we have a break, right? So we have these conflicts in our prediction. Well, remember back then, Young and Keel didn't have any type of set routine, so I was just trading whatever time frame I wanted to. So if I'm being fed buy gold, buy gold, buy gold, do you think I'm paying attention to the hold of structure that tells me to buy? Or am I paying attention to the break of structure that tells me to sell? Well, I'm paying attention to the hold of structure, right? Because subconsciously, I already want to buy. I'm just looking for confirmation. I'm just looking for someone else to say yes, right? It's no different than like when you're in an argument and you've already made up your mind about what side you want to be on, and you're just going around looking for someone to confirm you, right? You can walk around and be like, hey, pineapple pizza is the best pizza around, right? And the first person you go to is like, no. And then you go to this next person, like, no. And you go to 10 people and they all say no. And you find that 11th person, they're like, yeah, it is. And you're like, yeah, I told you, right? Just forgetting about the 10 people before that said no. Because we just want to be fed what we already believe. We can go into a whole deeper conversation about this, about social media and the algorithm, right? Do you wonder why your algorithm always supports what you already believe in? Because that's what they feed you. You don't see the other side of the story because they know what you want. They know what you want to hear. And your algorithm supports everything that you already want to hear because that's what keeps you happy, right? Would you log on to social media if everyone was against you? No, right? You log on because you want your opinions confirmed. Like, yeah, I am right. Yeah, right. The whole community thing. So vice versa, if the news is telling me sell gold, sell gold, sell gold, well, all of a sudden now I'm paying attention to the lower time frame, which has a violation. So we have this conflict of interest here. And when we have this conflict of interest, we do what we want to do, which is trading off feel and emotion. And going back to the conversation from Monday's Q&A session, pretty much that's not trading with an edge. That's trading off of randomness. Or even worse, trading off what you think. And typically what we think as newer traders, right? We have bad ideas. We think the wrong thing. So you can get into a lot of trouble doing that. So that's why it's so important that you need to have a routine. I don't care, right? I don't care what your routine is. I don't care what time frame you use as a higher time frame, what time frame you use as a lower time frame. Just be consistent with it, right? So if you're a daily trader, and you have to know what you use your time frames for. That's another thing. Meaning like, hey, I use the daily to create my bias. I cannot go against it if, blah, 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 blah happens. Or maybe you give yourself permission to go against it, right? Again, it doesn't matter, to each his own, but it needs to be rules-based. That way you're consistent in the way you do it. So in this scenario, if I'm using a daily time frame, I've already decided based on that daily time frame that until we get a break and close below, which we'd have to wait till the next day, I cannot look for shorts. So therefore, when I see this opportunity here on the 4 hour that did break and close below, this short is irrelevant to me. I can't take it. It could be the best setup in the world. I can't take it. You can start looking for opportunities for longs, maybe like a false breakout, or maybe like a head and shoulders that gets created, or a break of structure. But I cannot look for shorts. Does that make sense? At the same time, let's say you're someone that instead of going from daily 4 hour, let's say daily 4 hours, one combination A. If you're a trader that goes from 4 hour hourly, your view is completely different. Aside from the potential for a false breakout, which we would know in the next 30 minutes, right? you're looking for shorts, and now you have an actual setup that you can dig deeper in. So it matters what you have to have a routine. That's the point of this whole rant. You have to have a routine. You have to have a setup, a system for how you view the markets, higher time frame, trading time frame, lower time frame, or higher time frame, lower time frame, however you want to organize it. And you have to know what you're using each for. If you don't, you're going to be stuck in randomness, in confusion. All right, you don't want to do that. Now, I don't do this nearly enough, but if you're interested in learning how to trade, check out our website, www.tier1trading.com. We have a risk-free trial membership that gives you 14 days on the platform. You can check some stuff out and make sure we're the right fit before you commit. We're not just one of those coaching services that gives you a training lesson and leaves you on your own. No, we want to work with you. We want to support you, but you get out what you put in. So if you are going to get on the platform, make sure you involve yourself with the community. Make sure you attend the Q&As. Make sure you schedule accountability sessions. Make sure you join or at least watch the recording of the live rooms. All of this stuff is purposely put together to help support you on your path to becoming a consistently profitable trader, because as we've said before, trading courses on their own don't really work.